Are you a 40-year-old? Are you worried that you're not going to achieve all of your financial goals? In this week's episode, I'm going to give you the 10 financial goals that you need to hit while you're in your 40s. You do not want to miss this. Hi, I'm Dr. G and welcome to this week's episode of the Financial Dispensary with me, Dr. G. So we're currently busy on a series in terms of 10 financial goals that you need to hit in each decade of your life. If you are 20 or 30 year old and you missed the previous week's episodes, I'll drop the description up there for you and you can go back and rewatch those episodes. Or even if you're in your 40s, maybe just go back and make sure that you achieve the 10 goals that I set out while you're in your 20s or your 40s. But this week's episode, we're going to delve into the 40-year-olds. This is the decade that I'm currently in, so I can give you the assurance that I'm also working very hard on achieving all of the financial goals that I'm about to give you. So, without further ado, let's see what they are. Goal number 1. So, for those of you that watched last week's episode, this is obviously the bonus goal that you need to try and achieve while you're in your 30s, but it is a detailed estate plan where you focus on costs, tax, liquidities, and how everything just brings it together. So remember, the reason why this goal is so important is that the only knowns, the only certainties in life are death and taxes. So inevitably, at some point in the future, you will pass away. And at that stage, if you follow kind of these simple steps that I'm setting out, by that stage, you would have accumulated a lot of wealth. And obviously, that should be one of your primary goals, to make sure that the wealth that you've accumulated is not kind of destroyed completely, but you're able to share that love and share that value creation to the next generation. So sitting down with a qualified, trusted partner that is able to give you a detailed estate plan is very, very important. Things like in terms of how to structure your estate, in terms of when to utilize companies or trusts, things like beneficiary nominations in terms of policies, how the money will flow, what costs and expenses you need to budget for, liquidity, is there enough money in the estate? Those are questions that are very, very important. And as I said, on this series, we're just going kind of high level areas that we need to focus on, but in future episodes, we're going to go into much more detail and kind of explain exactly what I mean when I say make sure that you have a detailed estate plan. But that's the first goal that you need to hit. Secondly, design systems for excellence. Now, this is probably the single biggest, most important goal that you need to achieve while you're in your 40s. So again, let's just think in terms of the life kind of cycle that you've gone through. You went through the 20s. The 20s was a time to jowl and party. You weren't really that focused in terms of kind of financial planning. You had these big dreams and goals and ambitions, but the plans weren't really in place. And then suddenly, as you kind of dropped the adolescent kind of tag, you went into your 30s, you started to have a bit more stability with regards to career, and hopefully your income generation capabilities also started to step up. Now we're in the 40s. So your 40s and specifically in the 50s, this is the time that you milk it. This is the time that you need to make lots of money to make sure, just like a squirrel, that you save up enough money for retirement. So when I refer to a system for excellence, it's basic things, but it's things that are very important. So let's delve into that. What do I mean by a system? A system that you can review your budget on a regular basis. Something as simple as that. I know of a lot of people that just don't know in terms of where the money goes. So we all have that saying, by the 15th of the month, or even the 10th, or maybe even the 5th of the month, you are broke. You have no idea where the money goes. So the 25th or the 30th or the 1st, your money comes in from a paycheck, but it then just disappears and you have no idea. But just having a budget and keeping it up to date, it will give you some guidance and some kind of ideas in terms of where the money is going. So budget is very important. Having a reminder or a calendar kind of instruction that you review kind of some of the bigger things, like reviewing your last will and testament, updating your policies, just general financial planning, completing your tax returns, all of those things. So there's key events that happen throughout your year. And by designing a system that works for you, where you are kept on a specific schedule to make sure that you don't miss key kind of deadlines are very, very important. Something as simple as kind of maybe reviewing a short-term insurance policy to make sure that the asset that you're insuring, that value is still the correct value. Basic things, but very important. So design a system that works for you. Even if you just start off by going and putting in a random time in the year when you're not too busy, put a calendar in a meeting request to yourself and say, sit down, take a couple of hours and review your systems to make sure that your financial planning is still on track. Third one, retirement. So as I mentioned in the previous one, in the 40s is definitely the time frame that you need to really double down on this. So again, if you crunch the numbers and by now you maybe have a better idea in terms of what your retirement goals would be like, or what the goals are that you're working towards, I can almost guarantee you that you're probably well behind in terms of what you need to do. So remember, again, in those phases of your life, the 20s and 30s, you tend to be a bit low scope. You're all over the place. So by that stage, maybe you lost some time in terms of saving up for retirement. But now in the 40s, it's very important that you double down and really get stuck into this. So when I kind of wrote this and I said double down, I can almost guarantee you that whatever you're saving towards retirement, double the amount now to make sure that you have sufficient time on your side to save towards retirement. Number 4, also a very important one, and it ties in very nicely with the second goal in terms of that system for excellence. Write things down, save to file. Unfortunately, I got the very bad news that a while back a client of mine passed away. And when I spoke to the surviving spouse, one of the things that we kind of spoke about is that does he have access to a bank account? And he said no. He's got access to the online, but he doesn't know what a PIN is. So something as simple as telling the people very close to you in terms of what your bank PIN is, what your password is for your laptop, where the last will and testament is, where kind of the password for your where the seed phrase is for your crypto hardware wallet. These are things that while you're alive, you don't constantly think about, but these are things that are very, very important. So have a file, communicate open and honest. Remember, that was one of the key things that you need to do in your 30s. Communicate with your partner so that they understand what's going on, where to get the data. So you don't have to give them the data specifically, but at least tell them where the data is, where they can find it. Make copies, make backups, write it down. These are things that are very important because, again, in the event of a critical illness, severe disability, or heaven forbid death, everybody's just flustered. And remember, you're going through so many emotions at that stage. Maybe it's kind of, you just kind of, well, there's a lot of kind of sadness and emotion that goes with it. You do not want to struggle when it comes to the administration part thereof. And again, if you have a system for excellence, you have a place where you can back up and update all of your data as things change, and you tell your loved ones, partner, spouse, trusted financial planner where the data is, I promise you, everybody will be very grateful for you. Number 5, which again just ties in very nicely with the fourth and the second one, your last will and testament. Unfortunately, the reality is in your 40s, you're probably 50-60% on this, let's call it journey on earth. So again, inevitably, as you go older, as you age, the reality of death will become more and more likely. So things like in terms of where's your last will and testament, the original, and that you tell somebody something basic, but it's an easy one. You tick it off and it's done, and you don't have to worry about that again. 6th one, asset allocation, the risk and return trade-off. So again, in the 20s and 30s, you might have tried a lot of kind of investment opportunities, but while you kind of get a bit more financially educated and financially more astute, you need to understand what your ideal asset allocation looks like and what the risk and return trade-off is. So again, in a future episode, we'll go nice and deep on this specific topic, but to break it down, it's very simple. Many moons ago, the clever people figured out that We have what we call is an efficient frontier. So all that the efficient frontier is, it looks like I'll show you in a future episode in terms of what the graph looks like, but there's effectively a risk and return trade-off. And what that means is, if you invest in conservative assets like cash, that the risk or the volatility is very low, you're going to be compensated accordingly, which means you're going to have a low compensation. And as you move along this curve, there are other investment opportunities where the potential return is much higher, but it comes with a lot more risk and volatility. And we have a saying, it's a bit of a tongue-in-cheek, but all of our clients are greedy conservatives. As soon as they want 20% return per year, but they want zero risk. And unfortunately, in terms of investments, you need to kind of figure out what that ideal balance is between. And what we also kind of recommend is that when looking at your investments, you have different investments. So certain investments are conservative. Your risk return trade-off is kind of, you don't want a lot of risk and you're happy with the lower return. And then with other investments, you're happy to absorb some volatility because you want that higher return, because as an example, it's a longer term investment. So very important that you understand what all of this means. In your 40s, you don't want to be in a situation that you're constantly jumping from pillar to post, because if the markets are up, you run towards the best performing investment, and when the markets are down, you want to run back to the bank account cash. Get an understanding in terms of what asset allocation means like, get that mix, and then just sit on your hands and enjoy the journey. It's as simple as that. Number 7, diversify offshore and into crypto. So at the moment I'm shooting this video from Cape Town or Stellenbosch in South Africa, and this is very pertinent for us here in South Africa, where over the last 2 decades or so, the South African economy has not kept up with these peers, right? So when I say diversify into offshore and crypto, I effectively want to motivate you to start placing investments or allocating funds towards investments that are not linked to A, the South African economy, and B, the South African rand or our national currency. And both in offshore and crypto, these are both investment opportunities that are not linked to the South African economy or to the South African rand. Again, in future episodes, I'm going to go deep on this topic. So again, I'm not saying go balls to the walls, all in on these two investments. Just have an opportunity or a portion of your total wealth not directly linked only to the South African economy and South African rand. So again, as a guideline, I would say a good starting point these days, I would say about 25% is a 25 to maybe even 40% max is a good kind of place to start. And all I want to have some return profiles that are different to the investment opportunities we have in South Africa. And hence why I'm saying into offshore, and obviously into an area that I'm keeping a very close eye on, digital assets and crypto. So goal number 8, fostering strong relationships with people that will help you. So in my view, I think while you're in your 40s, you should have ideally a business relationship, but also maybe a personal relationship with 4 key people in your inner circle. The first one, a kick-ass, trusted, certified financial planner. Financial planner's goal is to cast the vision in terms of what your financial goals are and to keep you accountable that you're staying on track. Very, very important. Probably the strongest relationship you need to have. Secondly, a strong relationship with a lawyer. Unfortunately, laws are prevalent all over the world. You need to have somebody that you can kind of fall back onto when you have some legal kind of challenges that you need to overcome. So strong relationship with a lawyer. Third one, accountant, auditor, professional accountant, somebody that has strong knowledge and experience with regards to tax, accounting, how kind of money will flow, very important. And the fourth one, maybe as a bonus kind of relationship, somebody in banking on credit, somebody that can assist you and maybe advise you in terms of if you need access to some credit, how to go about. But strong relationships with those people are very important. Goal number 9, pass your learnings onto your children. So as I said, we've gone through the 20s and 30s, 2 periods that you've tried stuff, you've played around, you've made good financial decisions, you've made bad financial decisions, and you're building up your financial intelligence or financial IQ. Very, very importantly, start to instill the things, the learnings that you've built up over the years, and pass them on to your children. Remember, the first financial goal was that estate plan. At some point, you're going to pass along the wealth that you've created. Don't just give them the money, give them the kind of the tools, give them the financial IQ that you've built up. With that financial IQ, they'll be able to make their own money in any event. So, number 9, pass your learnings on to your children. Very, very importantly with regards to that. Goal number 10, maximize all the tax benefits. So, tax, as I said, unfortunately is a reality. It's not going to go away. It's always going to be around. So, try and figure out with good advice in terms of how to structure all of your kind of tax affair. Things like retirement annuities, tax-free savings, 12J funds, 12B funds, corporate structures, companies, trusts, how the money will flow, offshore structures. There are a range of opportunities that are available to you, so make sure that you have good quality advice and guidance in terms of what you can and can't do. So as with anything in life, there might be a bit of a grey area. Be careful for the grey when it comes to tax administration and tax regulation specifically. Just be careful that you don't push the boundary too much. So there you have it, 10 financial goals that you need to hit in your 40s. And as I promised, every week I'll give you the bonus tip. The bonus tip, and this is something that me personally was struggling with earlier in this decade, is debt. So get serious about it. I think we all go through these kind of life stage, if I can put it that way, where while you're in your 20s and your 30s, you like spending money, of course. You just go through this kind of euphoria stage. You earn money, it's your own money, you can do with it whatever you want, and you enjoy spending it. You don't necessarily save. And then suddenly there's this kind of opportunity where you are able to get debt or credit. So banks phone you and say, do you want a credit card? You have access to kind of loans and all of these things. So before you know it, you start spending other people's money, the bank's money. And before you know it, it's a slippery slope. So get serious about debt. Most likely car debt, home or property debt might still be there. Hopefully in your 40s, credit card debt and loans and student loans and those kind of things might not be as prevalent anymore. But very, very importantly, get serious about debt. So have a proper structure in place in terms of how you are going to finance the debt, and try and eke out those small kind of wins to try and get that repayment turn down. So there you have it. Gave you 11 financial goals that you need to hit in your 40s. As every week, if you enjoyed the format, smash that like button for the YouTube algorithm, please. If you enjoy the content, please forward on this episode to a friend or family member. If you have any questions, feel free to drop them in the comment section. And I look forward to seeing you again next week. Thank you, and until next time, bye-bye.